As oil falls, stocks tumble. Stocks are falling because of the price of a barrel of oil. And two big problems are weighing heavily on the stock market. Falling oil prices. Crude oil is falling, and that's pushed energy stocks lower. And fears that the economic recovery isn't coming fast enough. And with that comes a worry that corporate earnings are likely to be weaker than expected, thereby pushing the stock market even further down. In other words, there's something wrong with the price of oil. Something seriously wrong. A critical junction for oil prices. If oil prices continue falling, we're going to be right back where we started. And when they stand up, they're always falling back down again. More oil projects will be shelved, and future supply will be put on hold. No planning for the future at all. We'll simply end up with another supply crunch from the lack of new investment. So in other words, if the price of oil is not high enough, then there'll be no investing in finding or producing any future supplies of oil. That is not a good equation. The cheap, easy-to-get oil is nearly gone. Even the mighty Saudi Arabian fields look more like gigantic wishing wells, considering the amount of seawater they're pumping into it. But unfortunately, the United States can't afford to wait around much longer. If you haven't noticed, our domestic production has been spiraling down the drain lately. And last year turned out to be quite a year for U.S. oil production. In fact, last year our domestic production fell below 5 million barrels per day, 4.95 million barrels per day, according to the EIA. The last time our production fell below that mark was in 1946. Meanwhile, our consumption levels grew to more than 20 million barrels per day. Understandably, much of that production loss can be attributed to oil prices collapsing to $30 per barrel in 2008. However, that price collapse took its toll. Oil companies across the board were forced to slash drilling budgets. According to Oil Field Services Company, Baker Hughes, there are approximately 908 oil rigs drilling for oil and gas across the U.S. To put that into perspective, there were over 1,600 rigs operating just last September. That's quite a loss of rigs. But the problem isn't just our declining production. Remember, the United States is importing approximately 3/4 of our demand. Nearly half of our imported oil comes from various OPEC countries. Canada is one source, but our addiction is still mostly dependent on OPEC as a whole. And OPEC knows exactly how valuable their crude is to the market. The precipitous fall for oil prices late last year has decimated nearly every oil and gas company in the industry. It has also struck fear in most investors, causing their knee-jerk selling. Lost in the panic. prices rebound within the next week. Expect OPEC to continue warning us on the danger of future production. So, how low would the price of a barrel of oil go? Well, if it goes too low, which it already is, oil companies don't invest in future production or exploration or drilling. No future investment, or no investment, no future. Not for fossil fuels or oil. And here's the bad part. If oil goes up, well, then that chokes off the economic recovery. That hurts the economy, which in turn pushes down the stock market also. So, it appears to be, or seems to be, that the bottom line here is, no matter what the price of oil is for a barrel, there is no good price. It's hurting the economy either way. Well, it's hurting the stock market either way. Too low or too high. It would have to be at least probably more than $100 a barrel for oil companies to actually invest in future oil projects. Anything under that is too low. But of course, in turn, or by contrast, anything over $100, well, anything over $70 or $80 a barrel is too much for the economy to handle, which cuts off any economic recovery. So either way, as long as the economies of the world, or the economy of this nation, is based on the price of oil, or a barrel of oil, it's not going to recover, is it? There can't be an economic recovery. Not a real economic recovery, because it's all based on the wrong thing, or wrong things. So, then, peak oil happens, or is in effect, no matter what the price of barrel oil is, because now, from now on, it's either going to be too low or too high. There is no right price for barrel oil. Not anymore, if there ever was. Yes, peak oil is true, no matter what or how it happens, whatever form it happens in. That's just the way it is. And fossil fuels, they're hurting the planet Earth. They are changing the climate. Fossil fuels are causing environmental degradation, which in turn causes more economic degradation, or meltdowns, whatever you want to call it. Yes, that hurts the economy too. So, it is time for the world to move away from fossil fuels as fast as they possibly can. Not slowly, but rapidly, because real change must happen. Everything that must change quickly or rapidly, and everything is connected. And these are more signs of the end times transition days. The transition must happen. It is ongoing every day all around the world, and there are many, many signs.